Good morning, folks. Hope everyone out there is having a good week so far. I'm just getting this all fired up here. All right, so let's talk a little bit about what's going on around these markets. But before we do that, we're going to just get through some of this introductory text and a disclaimer. So this is Back to the Futures with me, Markets and Mayhem. We're going to do live order flow analysis of stocks and futures contracts. And please note that all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. And let's talk just a little bit about me for those that may be unfamiliar with my work. My trading journey began in 2005. So I've been doing this for a little while. It's been about 19 years now. And I really started off trading stocks, as many people do, but I found that there was more to the markets that I wanted to sort of interact with. So I got really interested in options. Then I got interested in futures contracts and commodities and eventually Forex, and expanded my horizons to start to invest, rolling some of those trading profits into longer term investments in 2006. And so that was pretty cool to be able to trade my own capital, start to really learn how the markets work, generate some profits, roll them into some of these longer term investments. But I did start to get a little nervous in late 2007. I was just looking at charts, and the longer term charts were saying, look, the S&P could be a giant double top here. I was very technically focused. I was not into macro or really fundamentals or anything else back then. It was all just about technicals for me. So I just saw that and it scared me because I'm like, okay, this kind of looks like it might be a double top. So I'm going to get out of the way, and just if it breaks above, I'm wrong, I'll buy back in. But if it doesn't, then, maybe I save myself some trouble. I had no idea what was going to happen next. All I did know was, people were buying houses with no money down, with no documentation, loans. It was kind of bizarre what all was happening there. And so I kind of felt like the best thing for me to do in that type of a situation is to just step aside, right? If I don't understand what's going on in the market, and, the housing market seemed like it was getting a little bonkers, although that wasn't a big part of my decision-making process. It was just sort of the back of my head. I sold my investments. I got out of my long trades and just sort of stepped aside to see what the market was going to do next. And, well, it didn't go so well for a lot of folks, but at the same time, it gave me an opportunity to really get a better sense as to what drives the markets. We got to see the financial plumbing under a lot of duress, and as a result, it gave me the opportunity to really focus on the impact of central bank liquidity, of government intervention, of the economy, and other factors in the markets. So my approach from there has evolved to be systematic. It's driven by momentum, price action, options flows, sentiment positioning, volume profile, and of course, the big picture or macro. And so I know that sounds like a lot to process, but the reality is, for me, I'm a convergence trader. So I look for convergences to validate my thesis. I can't just have an idea and trade it. To me, that doesn't really help to really, get anything actionable, to have any confidence. I really need to see the market agree. So it's fine to have an opinion. I have lots of opinions. I don't have any trouble sharing them, but to trade on an opinion is an entirely different matter. I began working with Bookmap in early 2022 because I saw great value in the way their platform displays data, and they continue to evolve. They continue to improve the product and the add-ons that are available to it. So I find that it's not just was an attractive value proposition in early 2022, but it's actually gotten consistently better over time as well. And the folks at Bookmap are awesome. If you ever have an issue, they're good about supporting. They've got an awesome Discord community as well, which we'll talk about in just a moment. But I co-founded TraderAid in 2022 and Macrovisor in 2023 to share my experience, ideas on market opportunities, and education. I had some decent mentorship when I was younger. My father was an investor. I was fortunate enough to meet some folks that managed money and really kind of pick their brains about their processes. I have a mentor who's a growth investor. I have another mentor who's a value investor. So I got to kind of see both sides of how these folks look at bottom-up investing. And then I got to meet some folks that are more into top-down macro and pick their brains. I got to meet technical traders and pick their brains. So along my journey, even though we didn't have things like FinTwit and social media was in its very early days, I met folks in real life that were able to help me kind of accelerate. So that gave me the idea and the passion to try to give back. To try it because I was fortunate enough to meet some people, do well in the markets, and my goal now has been to give back as much as I can to help folks that are early on in their journey or just really looking for direction. So one of the things I do is I share my experience, my ideas on market opportunities, and of course, education, including one-on-one coaching. I also build a number of unique tools to help traders. And there are some exclusive deals available here. If you'd like to check out Bookmap, you can get up to 40% off. That's 40% off. Visit traderaid.com/bookmap. That's traderaid.com/bookmap. There's also a free day, a 3-day free trial on our Discord. You can visit wap.com/traderaid to sign up. Check it out. No obligation. If you like it, you can stay. If not, you can go. It's all good. But we want to give people an opportunity to check out what we're doing there because we think we have a pretty amazing community, tools, education, and of course, actionable trading ideas. And the SPX options visualizer that you'll see is an add-on. It's a data feed add-on to Bookmap. So you have to have Bookmap to use it, but it is available. You can learn more by visiting traderaid.com/SPX. And the value here is being able to see how options influence the market and having that edge because we know options are the tail that wags the dog. It's about 1.2 trillion of notional trading in SPX or S&P 500 index options every day. Across all the equity futures contracts, it's about 450 billion of notional. So it's a significantly larger amount of flow of money going through the options market, and that impacts the broader stock market. Also, if you're interested in one-on-one coaching, if you want an extra hand using Bookmap for your trading or anything else, you can get up to 20% off using the code CoachMap. Visit traderaid.com/mayhem to learn more. And join us on the Bookmap Discord. It's awesome. Again, I was saying there's a great community there. They have regular events to talk more about how Bookmap can be used, different trading styles, and really just support. If you have issues with the product, there's a whole lot of folks from the company, but also an amazing community of people that use the product that can share their thoughts and feedback. So with all that being said, let's dive right into Bookmap here. So on screen, we've got the December contract. I have rolled, and I'll tell you how I kind of look at this process of rolling because this is roll week, we're quad witching, all that good stuff. So I rolled last night and I did so on the basis because what I'm seeing at CME is volume now, as of yesterday's close, is exceeding September's contract and December's contract. And that's both in the NASDAQ and the S&P 500. So for me, that tells me, okay, it's a good time to roll. So we'll talk about that as the volume yesterday was what, 1.588 million in September, 1.74 million in December. Also, open interest has rolled. So you can see in September, open interest is 1 million. In December, open interest is 1.374 million. So that was a change of 500,000 down in September of open interest and 700,000 increase in December open interest. So both volume and open interest, and I know folks will use either one, but they converge here, both telling us it's time to roll to that ESZ4 contract, right? So that's what I've done. I've also rolled to the NQZ4 and RTYZ4 contracts because for similar reasons, they also have more open interest and more volume moving to that December contract. So it's really important to track this stuff if you're trading futures, if you're new to this and you don't necessarily appreciate the contract role and why we do this. So first of all, think about trading. You're going in and out of positions. That means that you want a tight bid and ask spread so you don't experience slippage. Slippage is the byproduct of trading something and having to go in and essentially the bid and ask are wide enough that you're losing money trading between those. So if you're trading a contract that's not the most actively traded contract, it's likely to be more volatile. It's more prone to slippage. You're not getting the best price discovery and execution in that contract. And that's especially true when you're talking about even less liquid trading vehicles like commodities contracts and some of the other types of trading vehicles you may have in futures like currencies futures and some of the even less used index products as well. Like if you're trading the Russell or the Dow, you've got to be very, very attentive. But I think at the end of the day, the best way to look at this is just go to CME's website, look at the futures product that you're using, and you can very easily look at the tabs here. You can go to volume and open interest, and you can see yesterday's trading. We saw that roll, right? We saw the open interest change. We saw the volume change. December is obviously the contract that's in demand now. This is really important because if you're trading futures and you're not doing this, you are likely to either get kind of liquidated out of your position if you don't roll in time, right? So it just gets cash liquidated at whatever the price was at that close on Friday or whenever your broker forces you out. Or you may not get the best execution if you go too far in the future on your contracts, as I've seen some folks do, thinking, oh, I won't have to roll as much. Well, there's a downside to that. So with that all being said, we've got about 18 minutes left until the market open. We did get retail sales this morning. The forecast was for 0.2% on core, and we got 0.1%. At the headline level, the forecast was for negative 0.2%, and we got 0.1%. So it depends on where you look as to whether this is a good number in terms of the expectations. But I would say that in terms of overall spending activity, this is back to school season. You're not really seeing retail sales pick up much. So that's just a little bit disconcerting that August didn't have stronger showing of retail sales. It does portend to the idea the consumer may be a little bit weaker. The economy may be a little bit weaker, particularly taking into consideration that retail sales is a nominal number. It is not adjusted for inflation. So just kind of put that all in the back of your head and remember that as we go throughout the trading session and look at things like retail stocks and how they may perform on a day like today as well, because it all sort of loops around. So on screen here, we have the S&P 500 futures contract for December, and I'm just going to walk you through how I have my Bookmap set up because I do get a lot of questions about this, and also I do need to add in a column here as well. So give me 1 second. And one thing I hear a lot from folks is, what are these bubbles? What do they mean? Why are they sort of shown on screen here instead of bars? Well, there's a good reason for that. These are delta bubbles, right? So what that means is you're seeing on screen the differential between buyers and sellers. So why is that important? Because it gives you an immediate view as to who's trying to take control of the market at any given moment. So I find it to be pretty helpful. I've just got the visualizer on screen, so I'm just going to quickly adjust my columns here. So there's the options visualizer column. Every time I roll contracts, I kind of got to reconfigure a few things. So apologize in advance for that part. But yeah, so we've got the visualizer on screen. That also shows us some of these key options levels and flow areas, and I'll get into that in a moment. But yeah, the delta bubbles are pretty cool. I like them personally. I also tend to like to put the volume bars on, so I'm just going to quickly throw those on. Those are also deltas, right? You can see volume delta, buy minus sell. So you see those appear on the bottom. And, if you see really like a series of really large green bubbles or really large red bubbles, you can see either side are getting more aggressive. And then you can drill down into that order flow more and figure out what's going on. Like, are we seeing larger passive desks leaning in? Are there icebergs involved in this? Are we seeing, for example, larger options flows come in? That's something my options visualizer tool can help us see. I also have this volume pressure indicator. I call it ES aggression because the way that I have it set up, this is the market pulse indicator. It's an add-on for Bookmap, and I have it set up so it's at a threshold of 90. So basically it's only going to alert me when either side is getting pretty darn aggressive, and the volume's not terribly high. It just kind of pings off in the background on my computer speaker, and it's sort of like, okay, you should probably look at your chart. Something interesting may be happening here, right? So that's part of market pulse. I'm using the volume pressure imbalance, and I'm using it specifically on ES to measure aggression from either party. So for me, that's pretty helpful. I also have stops and icebergs set up here, and you'll notice they are color coded and they are not necessarily shown as frequently as what you might expect. And so there are reasons behind that. What I'm essentially doing with the stops and icebergs is I'm trying to focus on the flow that is a little bit larger, a little bit more aggressive. So here's my iceberg settings if you want to have your Bookmap set up the same way. For me, this just helps to sort of clean up the screen, and I'm only really showing those that are a little bit more, let's say, potentially influential or important. So I'm doing a standard deviation interval of 30 minutes. That's 30 minutes of sample data. And I have the multiplier at 10 for the standard deviation. So it means it's really only showing bigger flow based on that last 30 minutes of trading. And then I do disable some of the icons. I don't show the cancellation, event type, or event volume. And, I make the icons a little bigger, I should say, and I color code them. Okay, so that's what I do on both the stops and the icebergs. The other thing that I do on the stops is I'm only showing stop runs. And so that means, as the little pop-up says, it's basically only showing stops through multiple price levels. So that's also helpful for me because I'm really only looking for that unusually aggressive activity, and that helps to remove some of the other data that, for other folks that are scalping or trading shorter time intervals, perhaps that's actionable to you. For me, I've found that it's more helpful because I'm I would say I day trade on slower time intervals. So my hold times are, tens of minutes or hours rather than like seconds or just minutes. So I really like to kind of zoom out a little bit. I'm looking at a half hour of market data on this chart here, as you can see, but I will sometimes zoom out. Like, for example, we can zoom all the way out to the European session, and we can see we had this sort of implicit bid from the European session lows into where we are now after kind of drifting down a little bit overnight. So that's also interesting to see just what happened during the various auctions overnight. But most important to me is the US auction, and that's where I tend to do more of my trading if I'm going to day trade this market. And I'm pretty selective. So I have a kind of four-pronged approach that I take when I'm looking at setting up a trade. The first is really the opening range. Right? I want to see whether we do have the potential for a trend day. I look at the 20-minute opening range and I look for a break above or below with some acceptance built. Then I like to look at resting liquidity. Like, for example, you can see there's 344 contracts above us. That's part of sort of that band of liquidity that's been around the S&P. But if we see any larger levels above or below, and they conform with the idea of, like, let's say we have an upward trend day, right? We break above the opening range, we start building acceptance, we see offers building above in size, hundreds of contracts. That's the next step that I need to see, right? I really like to see that resting liquidity agree with the trend day. Then I like to see options volume. So if it was an uptrend day, I'd like to see the hot call also ideally above price, and even more ideally, some degree of convergence with that resting liquidity. Because then you have market participants showing strong interest in a specific price level, which would be where I'd like to take my core position off, right? And then the fourth one is zooming out looking at volume profile on a daily chart and finding where those pivots are. And I created a system to automatically derive pivots based on volume profile. So it sort of does my process for me. And that's something that we have live streamed on the TraderAid Discord. So you can see those pivots, in real time on the NASDAQ and the S&P 500. And I'll bring that chart up later for you all if you want to see it. But essentially, what I'm trying to do is use convergence to build confidence and to have a better sense that the market is potentially moving in a direction that favors my setup. And that gives me multiple places to check to see whether or not my trade is still valid. And if it's not still valid, then, obviously I'm not going to necessarily keep that trade on or even enter that trade if it's something that I'm still waiting to be validated. So going into today, Tuesdays, statistically speaking, tend to be the most bullish day of the week. So it is a day where you have to kind of take into consideration some of that, sort of past trends that we get and how they can impact trading. Friday is the second most bullish day of the week for those that are keeping score. So just kind of keep all that in mind as we're trading. Doesn't necessarily mean it has to be an up day. It just means there's a higher probability of an up day. Let's take a look at some of the other markets and stocks as we head towards the open here. We have the NASDAQ on screen. NASDAQ seeing a little bit more pressure. S&P seems just somewhat more, well, you zoom them in, they kind of have a similar look here overall, but we're just seeing a little bit more pressure here in the NASDAQ as we get closer to the open, as it gets closer to its point of control. We can see S&P also testing its point of control. Russell doing the opposite. Russell, I like to say, just doing Russell things. You can see there are sellers here trying to sell the Russell, but there's also passive buyers that continue to bid underneath. And one of the things that's interesting about the Russell is it's sort of the preferred hedging mechanism as a macro product. There's a lot of single stocks that hedge funds short as well, but the Russell is their favorite macro short. And so what that means is when they're looking to offset their long exposure, they are tending to short things like single stocks and the Russell 2000. And so with the NASDAQ under a little bit of pressure, pre-market, just in the last, say, 10 minutes, seeing the Russell run up during the same time period is not particularly surprising. Because if you're long the NASDAQ and you're lightening up exposure, if it goes against you, then you're going to also cover some of those shorts in the Russell. And there's a really big offer up here at 2240. So that's going to be a level to watch because this contract is thin. The order book is only about 4.2 thousand on this contract. So seeing, 383 contracts on offer, almost 10% of the order book on offer right above us. That's a big deal. So we'll be watching that. Here's Bitcoin. Bitcoin's had a choppy trade. I'm really not looking for it to do too much unless it can get above 60,800 or so. I covered it in yesterday's Macrovisor dashboard. My opinion on the Bitcoin technicals. We're sort of in this downtrend, consolidating some of these losses. We need to break back into that former trading range to start looking more constructive. So that's something to watch if you're involved with crypto right now. It's a little bit more precarious. It doesn't mean it may not eventually resolve higher, but I am looking at about that 60,800 level as a key pivot to see if we can break above that and get back into that previous trading range. Apple pre-market, let's just take a look if we zoom out a little bit here. Actually, kind of a rough session for Apple pre-market going back to the European Open. So that'll be interesting to see how some of these mega caps fare. And I'm just going to reorder these to be a little bit more alphabetical. So pardon me as I do that. And I also added IWM. I know we have Russell, but I'm just going to play around a little bit with IWM as well because I am building an options visualizer tool for that and some of these other things. So lots of stuff going on at TraderAid in terms of software development. It's a lot of fun. And then I'm just going to move some of the commodities contracts and equities contracts to be closer to each other. Just that organizing so I kind of know where to find stuff when I'm digging into the trading day today. Because I just did a bunch of rolling last night. I didn't necessarily completely reorganize my book. So here we are. We're reorganizing as a team. Got Alphabet on screen here. We'll zoom out. That one actually is a much more constructive look from the European session open and the overnight open. And of course, we have IWM. It's doing the same thing as Russell, so we don't need to focus too much on that. Meta overnight, pretty flat, interestingly enough. It has been one of the market leaders and certainly tends to show more strength, especially when the AI narrative is prevalent. Microsoft overnight, pretty flat, sort of like Meta. So really Google bid, Apple skid, Meta, Microsoft pretty flat. NVIDIA overnight getting a bit of a bid too. And Tesla. Tesla also getting a bit of a bid from that overnight. So it's a mixed bag in the mega caps. Meta, Microsoft flat, Apple down a bit, Google up, NVIDIA up, Tesla somewhat up as well. And ahead of the open, S&P 500 cash is implied to open at 0.4% higher. NASDAQ cash is implied to open 0.6% higher. Russell 2000 cash implied to open just about 1% higher. Let's take a look at our friend crude oil. It's been a wild trading vehicle recently. We saw it short positioning get to extremes here, like multi-year extremes in crude oil. And then on the other side of it, as is often the case, when everyone gets on one side of the boat, it can get a little tipsy, it can topple over. And indeed, we are seeing a little bit of that, in shorts getting clobbered in crude from those lows that we saw in the mid 60s as we had weather patterns shape up in the Gulf that were a little bit more threatening of some of that production. We have geopolitical tensions once again kind of boiling a bit in the Middle East and Eastern Europe. And then we also have OPEC Plus cutting supply, cutting production in the first half of 2025, particularly the first quarter. And so all of that has kind of started to turn a bit of that oil fade trade on its head. So overnight, oil was volatile going into this session, but it has a somewhat constructive look going into today. So we'll be keeping an eye on that one, as well as gold. Gold recently making new all-time highs, hitting my target, which was 2,600 in September, if you recall, following along some of my gold-related analysis. I've been pretty bullish on gold all year and started to get much more bullish on gold into the summer when we started to really see it, make some pretty big moves. And that's when I started to say I felt 2,600 in September was all but certain. Also saw options flow that started to suggest other larger participants were looking for that. And so my next milestone for gold is 3,000 for the first half of 2025. I think we hit that level, and I think silver also has a phenomenal run from here as well, as it's starting to break out. It broke out of a descending trend line. We are starting to see more demand for it for some of these electronic projects, whether it's vehicles, communications, energy, storage. Some of the new battery tech is much more silver intensive. So I do think silver has a role to play here. And as we get into a new central bank cutting cycle, precious metals will likely be bid pretty well with interest rates going down because, interest bearing assets are competition for precious metals. So if they're not providing as much interest, there's less competition. Just less than 1 minute from the market open here. And markets are open here. We'll just zoom out a little bit. We can see an offer overhead here at 57.3250. We are on the December futures contract. Someone in the chat said that they aren't able to get their options visualizer plugin working for some reason. I think that likely has to do with the contract roll. Be sure you're rolling to ESZ4, whether you're using Rhythmic, Bookmap data, or DX feed. The add-on has feeds for all three, but you definitely need to be using the December contract now because we're only maintaining data set for the most actively traded contract. And folks, if you have any questions for me, do let me know in the chat. Always happy to discuss what you're thinking about. If you have questions about the markets, if you have questions about what I'm talking about in this presentation or otherwise. Also, if you're interested in the bigger picture, I did post my Navigating the Markets last night. It is pinned on my Twitter. It's on my YouTube as well. So you're welcome to check that out and get my view on sort of the bigger picture of what's going on this Fed week, quadruple witching week. We've got a lot going on out there. And coming up at 10 a.m., the Fed's Logan speaks. We're no longer in a blackout period for the Fed, I guess. I thought we were, but here we are on Tuesday, and he's speaking at 10 a.m. We get the National Association of Home Builders Housing Market Index at 10. That could be a mover for ITB, XHB, some of the home building ETFs. Then we have a 20-year bond auction at 1 p.m. So those are the major macro events today. We also get business inventories at 10 a.m. That may not be quite as important as NAHB, but we'll see. All of this stuff is always interesting to see what the data is, and in particular, how it may move the market, if at all. Let's take a look at the NASDAQ here, then we'll look at some of the mega caps. See, the NASDAQ got a decent bid, but it's starting to get faded here off the open. And we do, going into this week, remember, this is a week where you have pretty erratic trading conditions. So if there's one piece of wisdom that I could convey to everyone out there that's watching, it's be careful on options expiration week, because especially when there's contract roll, you're going to have much less, I would say, let's put it this way, price action is less likely to work with technicals, to work with flows, to work with volume profile than it is on other weeks, because you have very large players that have to roll these positions, and they're going to just roll those positions that doesn't really concern them what the price level is or what else is going on. They simply have large amounts, like we're talking hundreds of billions of dollars of positions that have to be rolled, and so that makes for a more erratic trading environment. The other thing to take into consideration is skew, or the variance between put premium and call premium on the S&P 500 index options. It is elevated going into this week. There is some hedging into what I like to call Fed Nest Day, right? That's when the Fed meets on Wednesday. And that's also Vixpiration, or volatility product expiration day. So we've got a lot of kind of funny things going on at the same time that makes this week, to me, a little less appealing to be aggressively trading. Now we do see pressure building in the NASDAQ here. We just pushed below the point of control. We're now testing VWAP. Got a somewhat similar look here on the S&P futures as well, both pushing to new lows. Russell also coming off of its highs and pushing down to the bottom of that trading range we have from the open. Let's take a look at some of the bigger stocks here, and we're just going to zoom them in so they're not quite as distorted by the volume variance at the open. So you've got Apple here. Apple pulling a bit lower. It did have a difficult overnight session. Amazon getting a bit of a pop, and then fading that pop from the open. You can see there's a rather large supply level at $189 on Amazon. Alphabet, large supply overhead at 160. Looks like a pop and drop, sort of like Amazon. This thing was holding it together a little better pre-market, but now we're starting to see some selling pressure there. Meta, overall, compared to the peers we've looked at so far, looks more constructive. Just sort of consolidating. Microsoft also looks like Meta here, overall just consolidating from the open. Pretty narrow trading range of about $3. Large supply overhead, 442, and reasonably large bid below at 435. NVIDIA from the open, seeing some selling pressure. So this is certainly one to watch. You've got a large area of bidding down below at 117, a reasonably large offer area at 119. So those are certainly levels to watch. And with NVIDIA and Tesla, the next one I have on my list, it's really important to watch your options flows. These things are so driven by options flows that's the other, besides S&P 500 futures, Tesla, NVIDIA, a lot of the NASDAQ stocks in general that are the mega caps tend to be very much driven by options flow. So it's really important to watch that as well if you have tools to do that. But from the open, we can see Tesla getting a bit of a volatile start to the day here as well. And going back to the elevated skew, one of the effects that has this week, especially today and tomorrow, is it does tend to create those passive decay flows that can bid up the futures or at least buffer downside for that first, say, half hour to hour and last half hour to hour of the trading day, depending on how much there is to work off. And that's also something we see overnight at the European Open. That's that same period where some of that that put decay starts to add liquidity into the market. So it is interesting to see the market open up with just a very brief pop and then some selling pressure, given that you have that natural passive implied bid coming in. It tells you there is some distributed pressure underneath the surface. And this is with a market that it is at some key inflection points. I'm just going to bring up a longer term chart real quick here, just to kind of show what I'm talking about. I'll use SPY here since we just had some of these rolls. Actually, you know what? TradingView is doing weird things with this. So I'll show the NASDAQ for now. This is the triple Qs, and we're just sort of pinging around this range. We're just above this descending trend line today, but I think this is going to be pretty important to see how we close this week based on this trend line, right? If we're able to close the week above it, then I think we're off to the races. We've got room to run higher. But on the other side of it, if we do make a decisive reversal below that trend line, I think the next area to watch really closely is how we react to that 20-day, which has been support really for this run. As of yesterday, we started to see it retested. We broke above it on Friday. That was encouraging to see. So it's all kind of contextual, right? It's going to be important to see how we trade against this trend line that really formed as of last week. Pretty volatile open overall. And because tomorrow is the FOMC decision day, I would expect that we have some just-in-time hedging flows as well today. That might be one of the reasons we're being pulled lower a bit here. And the reason that folks are hedging sort of right before events now is because there's so many funds that sell volatility that there's not a lot of reason to hedge too far in advance. Otherwise, you're basically losing the premium on your hedge. Seeing a little bit more pressure once again in futures. We're just going to look around the market here. Nasdaq looking a little better than the S&P when you compare them side by side. S&P just seeing a little bit more selling pressure here. Small caps just making new lows here. The Russell under additional pressure. Let's take a look here at 10-year note futures. I'm just going to zoom these in a little more. And we can see it's mostly just consolidation here, but rates are really kind of a pricing in a hard landing. It's interesting the divergence between what we're seeing in the rates market and what we're seeing in equities. And commodities similarly largely pricing in a hard landing as well. Let's see what crude is up to. Crude starting to go a bit vertical here. Let's see, we've got really large offer right up here around 71.75. So that's going to be an important level. You don't often see this much interest in bids and offers in the crude contract of this size. I mean, again, this is a small one, sort of like the Russell and the NASDAQ. So total order book depth today is 5.8 thousand. You've got almost, what, 5% of the order book just sitting there at 71.75. That's also noteworthy. And you can see some smaller stop outs here happening, about 57 contracts stopped out to the upside. Those are shorts that are stopped out, having to buy back that exposure. Let's take a look at Bitcoin. Bitcoin not really doing too much here post-open. Gold also not doing too much, just sort of consolidating those gains around 2,600. Apple had a nice little pop here. Maybe that's one reason the NASDAQ is looking a little firmer. So we're just going to zoom in our time slices on these now. But yeah, Apple getting close to the top of its cash session trading range. Amazon, a bumpy ride for this one, but it does seem to at least be defending VWAP. We've got an interesting size offer overhead at 188.50 on Amazon as it sort of stabilizes a bit more. Alphabet is coming off its lows, looking a little better. It's closer to the top of its trading range, above the point of control and VWAP here. You've got some supply overhead, a big level at 160. So that's really the key to watch in terms of where there's offers. We've got Meta on screen. Meta above its VWAP and point of control. Let's just zoom out a little bit on the time slice here to 10 minutes. You could see it had that pop, drop. Now it's just building back up above VWAP in the point of control and consolidating. So looking decent. Microsoft actually pushing to new session highs here for the cash session. You can see that with the price high level continuing to get pushed higher. There's a really large area of offered shares there at 442, about 16,000 on offer, and then a huge area at 450, 112,000 on offer up there. And NVIDIA, which we'll also zoom out to a 10-minute time slice here. And we can see actually NVIDIA is bucking the trend, making new lows, large area of interest on the bid, 174,000 at 117. And Tesla just testing that VWAP, bouncing from there, seeing a rather large area of offered shares at 234 with 46,000 and 233 at 32,000. And we'll also zoom this out to a 10-minute time slice here, just sort of consolidating. So we'll move back to ES. Very choppy trading here. And options expiration week, quad witching week. I mean, these are time periods where I feel like a lot of traders are best served sitting on their hands, doing back testing, building their system, looking at their trade journals, doing a lot of things that don't involve trading, particularly at the index level. because there's so much position rolling happening that it's much more difficult to get a firm pulse on the market. Seeing a bid come into S&P, but it's interesting. It's not as much volume as we saw. You can see those more aggressive sell side delta bubbles as we made that downdraft. Here, it's more buyers are able to make a push, but sellers aren't really fighting them. They're not particularly aggressive on the buy side either. Nevertheless, it is important to take note that that resting offer overhead still exists around 57.3250, about 476 at that offer. And NASDAQ here just sort of consolidating. It has come off of its lows. It's retesting the point of control here. And definitely looking a little bit more constructive here in the NASDAQ than the S&P. Even still, you can also see it in the Delta. You have a little bit more aggression on the buy side. I'm also going to add those Delta volume bars on the bottom. And the ES aggression indicator also pinging, showing, and you can see it on the subchart here, some more buyer aggression. You can also see it in that delta bubble getting a little larger. So buyers are starting to get a little bit more aggressive. We're also starting to get some of that flow coming through. So you're getting your initial prints of options data. Right now, the hot put is the most active on the S&P 500 cash index, and just by a hair. So we're still going to watch these, see how the flow develops throughout the day. We've got the midpoint painted on screen because right now that flow is relatively balanced. And we do have another offer coming in here just around I guess it's probably around 57.49 or so. There's 505 contracts on offer for ES. There you go. Now we're starting to see more of that options flow come in. There's some convergence with the second most active call strike in that 505 offer as well. So that's the kind of convergence I like to see. The next thing that I'd really want to see is a break above the opening range we're about to form. Now, it's not the most exciting opening range, right? It's about, 11 handles? So it doesn't necessarily portend to a really exciting trading day. And again, caveat being it is OPEX week, so don't get too terribly excited about the sort of probabilities here. They tend to be much more subdued as to whether a trend day works out as a trend day, for example. So right now we are starting to see a little bit of a seller exhaustion print here. That's what these two red circles are. That's an indicator that I built. It's exclusively available on our Discord when we're streaming. And this can just help to potentially show sellers getting a little bit more aggressive. And sometimes it can lead to a price reversal. So let's see if that happens here. But at the very least, you can see it. Look at that massive sell delta candle. Sellers got really aggressive there for a moment. And we're seeming to potentially ping this gamma 1 level. This is the largest level of gross gamma exposure on the chain outside of the vol trigger. That vol trigger looks like it's just down there, implied about 5,600 on SPX. Got about 10 minutes left on the stream. If you folks have any questions, let me know. RK says, brackets have killed Bookmap, no real levels anymore. I mean, to some degree, but you still have these really large offers to keep track of. Like this guy was a spoofer, I guess. He's gone now. So see you later, spoofer guy. But no, you do have some of these offers that stay on the book. Another one that was on the book for a while that's probably no longer there was way lower. Actually, he's still kind of there. 53.75, about 1,000. You know, that's another area where someone's been sitting there on the bid. I think before they were at like 52.50 on the September contract. The brackets are annoying. You can use TradeMap Lite or Pro to get rid of them, but if you do that, you may not get as accurate data on things like icebergs and stops and sweeps and absorption and otherwise. So I kind of have to take the poison pill of having the brackets around the trading because I need the other data to be accurate for all of my tools to work as I'd like. It would be cool if there was a feature to filter them out without necessarily augmenting the data in a way that was problematic. So coming right up at 10 a.m., we've got the Fed's Logan. He'll be speaking right ahead of Fed Nest Day, which I find somewhat odd. Then we have the National Association of Home Builders, their housing market index with a forecast of 41, prior reading of 39. U.S. business inventories month over month with a forecast of 0.33%, prior reading the same. At 1 p.m., we have a 20-year bond auction. And that's pretty much it for the macro events today. We're also kind of at the tail end of earnings season for Q2, so not a whole lot of exciting stuff happening after market. And then in the evening, a bunch of macro data coming in from Japan ahead of their BOJ meeting, which will be coming up on our Thursday evening. And you can see from that exhaustion print, we got a little bit of a bounce, but now sellers are making a push again. So they did get a little bit exhausted, but it wasn't necessarily a turning point, more of a regrouping opportunity. And the way we're pushing below the opening range here and building some acceptance, I am tempted to say that if we're just looking at this from an opening range perspective on the 20-minute time frame, we are looking at it building into a downwardly trending day. Again, the caveat being it's options expiration week. Your mileage may vary. Let's take a look below and see what some of the options flows are telling us here. Wow, you've got a lot of interest in lower price with that warm put. Let's take a look at what might be overwrapped here by some of the, yeah, so the hot put is at, that can't possibly be right, 53.61. What? That has to be some hedging. I mean, the data is accurate, by the way. This is not a glitch in the data. That is accurate data, but what? And you can see that's exactly where that guy is sitting, that 53.50 with 1,000. So someone is hedging some pretty big downside risk here today, now. It's interesting. Doesn't mean it's going to play out, by the way. It just means someone is hedging for that potential outcome. And certainly I don't, when I'm looking at that flow, it's not all expiring today. Like these are full chain flows. I don't just look at 0DTE because 0DTE tends to be, let's put it this way. If you're not looking at the full chain, you're missing really important flow. And you can see now the hot put coming back up. So that looks a little bit more normal. I'm imagining that other one is now the warm put. Yes. Okay. That's a little bit less jarring. But nevertheless, there are some really large flows coming in at those lower strikes. So we continue to make new lows in S&P futures. NASDAQ futures have a similar look, so it does look like a downwardly trending day. We still have more constructive options flows looking for upside in SPX, so I don't really have the kind of convergence that I want to see to get more confident about this outcome, but at least from a opening range perspective, that is what we're seeing, the potential for a downwardly trending day building. Apple stock looking weak here below the point of control in VWAP. Amazon bouncing on the VWAP there. Alphabet, Google, whatever we call them, quite a bit above VWAP, actually looking much better than it was pre-market, but there's a large offer overhead at 160, 21,000 shares on offer. Meta bouncing off VWAP, looking pretty decent, sizable bid at 539. And that's really the largest that I see until you go up to 545. You can see there's 27,000 on offer. And then we have Microsoft here also looking a bit weaker below the point of control and below VWAP. You've got a pretty large offer overhead. It's 442, 16,000, but the really big one is at 450 with 111,000 shares on offer. NVIDIA off its lows, but recently making new lows here. And you can see there's some pretty big bids below us here at 116.30, 116, and 115.50. And Tesla actually looking reasonably constructive above the point of control, above VWAP. You've got a large offer overhead at 233 and 234. So mixed bag in the mega caps here. Let's go back to the S&P. I've got about a minute left on the stream. So I want to thank you all for tuning in. If you'd like to learn more about my work, visit TraderAid.com. We do have a 3-day free trial for our Discord. You get access to all these trading tools, as well as live streams, education on how to trade, on how to manage risk, on how to become more disciplined and consistent, actionable ideas, and an awesome community of traders. And it's a 3-day free trial, so there's no obligation. You can also check out Bookmap if you'd like to get up to 40% off. Visit TraderAid.com/bookmap. That's TraderAid.com/bookmap. If you're interested in the options visualizer tool that I've been showing, you can get a copy of it. You do need to have Bookmap to use it. You can visit TraderAid.com/SPX. That's TraderAid.com/SPX to learn more. And if you'd like some one-on-one help to learn more about intraday trading, Bookmap, risk management, building your own systems, etc., feel free to reach out. You can visit TraderAid.com/mayhem and use the code COACHMAP at checkout for a 20% discount. So I want to thank everyone for tuning in. I will be back next week, Tuesday, same time, same place, 9 a.m. Eastern till 10 a.m. Eastern. And be careful out there trading this week. It is options expiration week. And again, that means that a lot of the outcomes you might expect from the systems you built are less certain. Probabilities go down a lot that those outcomes are going to be what we would think, and that includes opening range, it includes flow, technicals, volume profile. So just be careful, especially with the indices and the really popular optionable stocks. As always, it's a pleasure. I hope you all have a wonderful trading week ahead. Remember, tomorrow is FedNest Day and expiration, so be extra careful trading into that. I'll catch you all next time.